Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, April 17th, 2023. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right now very narrow price range here heading into the RTH Open. This is basically about 30% of average here. If we drop this down a couple of days here, requantify, you'll see 31.6% of average range, as the market is mostly within the previous session's range and inside the 2-week narrow trading range. So we have a 2-week trading range here that's developed at these highs, very reminiscent of last time. We were up here at these highs when we rallied from the previous year's close up to the midpoint for the year. It sat here for a couple of weeks, eventually broke down and returned to the previous year's close. We've now since rallied and are now back in the same spot doing the same thing here. So is this one of those times where we go up one more before we drop? How's this going to play out? But again, the 2-week narrow range is going to be the fuel here that triggers the next wave of movement. As of right now, no major breakout just yet. Watching the previous session's midpoint here, failure could push price back within the range. But again, looking for early signs of directional bias this week and looking to see if we get expansion from this range. If we take a look here at the NQ, you'll see right here very similar price action. Here's your trading range. Here's today's price action, 30.1% of average range right now, just 61 points of range. It's been averaging about 200 on that 5 and 10 day split, so super narrow range, inside day, inside the 10-12 day narrow range as well. That range right there has about 1,000 points of energy at the very least. So whenever we do see a breakout, somewhere between 1,000 and 1,200 points of movement could be seen. The big level here is the FOMC key level right there. That's the bottom of the range as well, 12,925. If there's a break there, could open up a move right down to 11.9, and that's recent support. That's 1,000 points. That could be in play. Now, if we are to make a move to the upside, that would basically extend the uptrending nature of this move right now, and the next key level above could be somewhere in the 13.9, 14K zone. So breaking to the upside, looking for this thing to rally out of this range. So which way we're going to go out of this trading range? Do we stay in this range early in the week? As of right now, inside day, super narrow intraday range heading into the RTH Open, not looking like it wants to break out just yet. If we take a look here at crude oil, crude right now down 0.6%. This one hit the 83.52 level precisely. You got a falling 200-day moving average right there. That 83.52 is an FOMC key level, and it's also a very clear market structure level as well. FOMC here from September 21st, last fall, and ever since then it had become either resistance or support, and the recent squeeze back to that level was dead on and is now holding at that zone as resistance. We're pulling back just a little bit right now, but the short-term trend has been super bullish, very bullish. Is this next pullback going to lead to an attempt to transition through the top of that range and into the next level above? That would be the 93-94 zone. Or do we start to turn back down here, failing at the previous year's close, returning back towards 72s within the trading range? So that's what we're looking at early this week. How are we going to respond off of this level? As of right now, very narrow range. A breakdown through 81.50 could begin a process here where we at least retest 79 with the potential to see more weakness. So keep an eye on 81.50 early on. If we take a look here at gold futures, right now gold futures seeing quite a reaction on Friday. That's about the biggest move we've seen so far. It was a higher high failure. So price pushed to a new high, and then on the very next day here started to see rejection. Pretty significant move in terms of the day's range. It was a 200+% of ADR day, so a big day. And today you're seeing a little bit of a digestive day, absorption day after that sell-off. that could be in, again, the day before we see additional weakness up ahead. So is this higher high failure and is this rejection big enough for the return back down? And how far down do we go right now? If it's the significant rejection like we've been talking about here, then again, theoretically speaking, we have a shot to go all the way back to the blue dotted line below, 1830 up ahead. But you do it in increments. 1960 would be the next level, and once it gets to 1960, then it opens up some more downside. So again, is that the big rejection we've been looking for? Perhaps it is. It's not as big as the ones we've seen at this level the last couple of rotations, but it's not bad either. So again, keeping an eye on this, watching 2000 to see if it starts to lead a path to 1960 up ahead. Still very bullish in the short term, still responsive in the bullish Pima trigger zone, but perhaps this higher high failure is the first domino to fall here for a potential turnaround up ahead in gold. Lastly, taking a look at the YM. YM right now has been super bullish, very strong, failed new low here, massive rally, takes out the 33K level here and gets back above the prior support here. That opens up a path up. We talked about any pullback here could be a buying opportunity, even a pullback as deep as 33K, and we were talking about that to end last month. And this month there's been no pullback of magnitude at all. It's been up right away, holding in a range, seeing the previous month's close price bid, and then seeing a follow through to the upside, holding and continuing. Very, very strong. The upside level we focused on as a target is 34,500. So when we mentioned a break above this level, and when we were still down here, a break above this level could theoretically open up a 34,500 move to the top end of the range. It looks like this market is going to go get that right now. The last thing is one level up there. This level right here, that's 34,617. That's your FOMC key level from last December, and it is still a naked level. It hasn't been tested since the day of its creation. Drop downward, never getting back, never getting back. Maybe this is the time where it can go finish the move into that zone. So again, this one continues to lead to the upside. Any dip could still be a buying opportunity until proven otherwise. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.